Good morning to all. Dramatic movement in the global stock market yesterday, where the risk on impact came back into the market in the later part of the US session after Trump signaled to a media interview that the ongoing US-Iran war may come to an end. Oil prices retreated after staging a tremendous rally of close to 30% during the Asia session. But however, after Trump's remark, it actually closed in the red by the end of yesterday's US session, where it shed by 7%. The West Texas crude oil closed below $100 per barrel. With that, the US dollar retreated. Gold continues to hold firm above a key short-term support level at 5,046. And at the start of today's Asia session, all the major benchmark stock indices rallied hard due to the potential ongoing de-escalation on the existing US-Iran war front. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. So before we start today's daily session, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so let's have a recap what has taken shape yesterday and as well as in today's early Asia session. So the primary focus will be on the oil price, in turn with the current situation in the US-Iran/war conflict over here. So what we could see over here is that, give me a minute, let me just make sure that the screen is good. All right, so let me put up the screen over here again. Okay, so yesterday's primary news flow is due to this ongoing potential, we call it de-escalation, that may come pretty soon rather than later after Trump signaled a possible end to war and floats removal of oil sanctions over here to primarily on Russia oil sanction over here. So that dramatically saw a decline in the oil price over here. So what I can see is that the West Texas crude oil over here during the Asia session, it rallied by 30% or so, hitting a high that was not seen during the onset of the Russia-Ukraine invasion that was in June 2022. So it hit a high of 119.54, just below the psychological level of 120. So that being said, over here is that we see oil prices dramatically drop down by it reversed down, close in the red, negative 7.3% after the initial rally, where it actually rallied hard, almost by 30% over here. All right, so there was a dramatic reversal in oil price, but however, it's still too early to say that this movement in oil price has ended. That means, i.e., this medium-term / major uptrend after this breakout of this down bottom and the breakout of this former major resistance from 28th of September 2023 high, whether this steep medium-term uptrend has ended is still soon to tell, because price still continue to hold above 75.55, 71.33 for now. All right, so with this dramatic movement in oil price, so we know that oil prices has been the main we call it a connector in the global financial markets in the past 10 days or so, due to this rising geopolitical risk premium on this ongoing geopolitical we call it conflict between US, Israel, and Iran that spread over to the the Middle Eastern region, where various oil producing stakeholders got sucked into this conflict, therefore creating a potential oil supply shock globally, which in turn could lead to a stagflation scenario, not even in US, but even in the rest of the world. So that create a massive risk of behavior in general, all right, with the dollar holding firm against almost the major currency, except for the Canadian dollar and in some form the Aussie and the Kiwi dollar that managed to help above their 50-day moving averages. All right, so with that, if you look at the US dollar strength, it also managed to subside as well after failing to break above last week high of 99.68. All right, so this is the US dollar index or the daily chart US dollar index. So after it struggled yesterday as well, failing to break above 99.68, but still holding above the support level at 98.55, which correspond very closely towards the lower limit, towards this pullback support line, this one in green, that is formerly the descending resistance from the high of 21st of November last year and 16th of January this year, where it got broken out due to the onset of the US-Iran war, the recent US-Iran war, and still holding above the 200-day moving average as well. Right, so it seems to us that the dollar index may stuck inside this range for now, 99.68 and 98.55 over here. And if you go to the performance of the major US stock indices yesterday, so the worst hit were the one that managed to recover pretty fast will be the Nasdaq 100, top performer yesterday, up 1.32%, and it traded near the session high as well. So this is where the news flow came out at 3 a.m. Singapore time today, which is yesterday's US session, where Trump mentioned to a media report that he kind of looking to end this US-Iran war. So that causes a very vertical spike up, right, in the last hour of the US trading session yesterday. So the other second up performer will be the Russell 2000, which is up by 1.12%. So given the fact that Russell 2000 comprises of small cap stocks, all right, over here, that is pretty much vulnerable to external shock, especially if there's a stagflationary environment coming back into the US economy. And also the Russell 2000 company has a much more levered balance sheet, that means pretty much sensitive to interest rate environment. So if we start to see stagflationary risk environment, that means i.e. inflation, longer term interest rate may remains higher, which in turn see a negative feedback loop on the performance of this Russell 2000 company, given that their operations is pretty much dependent on leverage. So if we start to see lower oil prices, which took shape yesterday, that created a opposite impact on the Russell 2000 performance, where given that the balance sheet are pretty much levered over here, any potential reduction in stagflation fear that created a positive feedback loop much more tremendously compared to the rest of the other major stock indices, which are not so levered in terms of their balance sheets. All right, so the Russell 2000, the second top performer, up by 1.12%. The Dow Jones Industrial Average up by 0.5% over here, and the SPX up by 0.83%. And as we could see across the board in Asia over here, we start to have also a positive feedback loop over here as well in the Nikkei 225. So the Nikkei 225 is up by 3%, 3.17% over here. During the Asia session for the Nikkei 225 futures, a bit of profit taking, because given the fact that the Nikkei 225 futures actually rose during yesterday's US session, Singapore time, at the 3 a.m. to 4 a.m. mark. So a bit of profit taking today when the Japanese session gets underway, down by negative 0.91%. The Hang Seng Index up by 1.32% as we are speaking right now, 14 a.m. Singapore time. And also the China A shares benchmark indices, which is the broader base CSI 300, up by 0.89%. The smaller, narrower China A50 benchmark stock index up by 0.7%. And going towards the rest of the other Asia Pacific market, also tremendously in the green right now. The ASX 200 up by 1.2%, trading near the almost near the session high. The Kospi recovered, up 5.5%, being the top performer. So bear in mind that the Kospi 200 or the South Korean market has been pretty much volatile in the past 7 days or 5 days or so, given the fact that they could actually tremendously increase by a wider magnitude of more than 2%. And once they decline, they also decline by a wider magnitude of more than 2% as well, given the fact that there has been very volatile upside movement since the start of the year, where Kospi 200 performance at the start of the year before the onset of the current US Iran war, which is on 1st of January this year up to 27th of February, the Kospi 200 index has already rallied by close to 40%, okay, within a space of 2 months. So the STI is also up by 1.51% as well. All right, trading near the session high. So net overall, we start to see a kind of a mini risk on behavior in the global benchmark stock indices for now, due to this remark made by Trump signaling a possible end to war. So later we'll be taking a look at the intraday technical outlook on what are the key levels to look out for today's intraday basis. So before we jump into the individual technical outlook, let me share with you one intermarket performance, which is pretty much closely related to gold price over here. So this intermarket relationship or analysis I shared before last week as well is the relationship with gold and the 10-year US Treasury yield. So yesterday we see a dramatic bearish reversal candlestick on the daily chart of the 10-year US Treasury real yield. So the real yield is taking into account of the nominal yield minus of the 10-year US break-even inflation rate, which is implying what will be inflation expectation 10-year from today. So yesterday we see a dramatic bearish reversal candlestick, a daily bearish reversal candlestick over here, reacting off from the 50-day and the 200-day moving average and close back below the 20-day moving average, right below a key resistance level at 1.89% over here. So if you look at previously during the start of this of the US-Iran war conflict on the weekend of 28th of February. So on Monday, 2nd of March, we see the rebound. So the rebound 1, 2, 3, 4, 5, 6. So 6 days of rebound after that bearish reaction yesterday from the range support level of this 10-year US Treasury yield at 1.66%. That led to the gold price to trade in a very sideways range, but still holding above the 50-day moving average. So that actually explains why gold price didn't actually rally that much last week or the last 10 days or so, 10 session, because they are being kept by this rebound seen in the 10-year US Treasury yield. So if the US 10-year Treasury yield now starts to slide back to retest the 1.66% range bottom in place since 17th of September last year, that could actually see a further push up in gold prices, at least in the near term. All right, so do take a close look at this 10-year US Treasury yield, which has a pretty much significant significant correlation with the movement of gold price. All right, so that sum up the intermarket we call it analysis between the 10-year Treasury yield. So if the 10-year Treasury yield continues to inch downwards after yesterday's bearish reversal candlestick to retest 1.66% in the near term, gold price could continue to inch slightly higher, perhaps back towards the current all-time high again at this 5,000 this is the closing price, which is at the 5,418 level. All right, so later I'll share with you on the short-term intraday level to look out for on the gold price XAU/USD. All right, so with that, now let us immediately move on to the intraday technical outlook. All right, let me expand my screen over here. So let's start with the FX market. All right, so FX market, we know that it's pretty much choppy in the US dollar index, sideways movement between 99.68 and 98.55. So therefore, we also start to see a spike up in the euro dollar yesterday. So euro dollar yesterday, due to a what I call risk management perspective, we have a rather tight short-term pivotal resistance at 1.1565. So to actually give us a better chance for us to exit if price action don't actually hit down as intended. So price action did move down as intended. It didn't hit the support zone of 114.95 and 114.70, 114.70, and it did a squeeze up, and it covered the gap down resistance that was formed on Monday Asia session yesterday. And right now it's actually hovering below the 200-day moving average, which is also very close to this this range minor swing high area of 4th of March and 5th of March over here, where the rally stopped yesterday, right? During start today Asia session at 116.47. So with that, I will flip to a neutrality stance for today, for now, for the euro dollar. So neutral right exactly at the 200-day moving average 116.73, and also yesterday's broken short-term pivotal resistance now turns into a pullback support, which was also this minor congestion area here that was formed during yesterday's Asia session 1 p.m. all the way up to 8 p.m. Singapore time, before the bullish breakout took shape at the 9 p.m. hour mark, right? So that'll be 115.65. So neutral between 116.73 and 115.65. So if we have a bullish breakout above 116.73 and the hourly close above it, potentially this rally could extend to revisit the 20-day and the 50-day moving average, which confluence with this graphical resistance zone of 117.40, 117.74, and also the medium-term descending resistance line, or descending trend line resistance that has been in play since the high of 10th of February. All right, so that's close to about a 1-month resistance line over here. So that's for the euro dollar. Next will be the sterling pound over here against the dollar. So sterling pound also rallied against our Titan short-term pivotal resistance yesterday, covered up the gap down resistance that was formed during yesterday's Asia session. But the rally stopped exactly at the 200-day moving average, and also confluenced very closely with this upper limit of this minor descending channel drawn from the high of 28th of January this year. So with that, I will have a neutrality stance for today. So neutral between 134.50 and 133.70 level over here. So if we start to see a bullish breakout above 134.50, that means breaking above two key technical elements level, which is the 200-day moving average and the upper limit of this current medium-term descending channel, that could extend the rally further towards the limit between the 50-day and the 20-day moving average at 135.05, 135.23. Above 135.23, potentially see a further push up to revisit the 26th of February swing high and 18th of February swing high at 135.75 level. All right, so that's for the sterling dollar. Next up will be the Aussie dollar over here. Okay, let me expand the screen. All right, so the Aussie dollar broke above the 70.70 level. All right, so this level here. Yeah, 70.50 level, pardon me. All right, and also broke above this minor descending channel previously in place since 27th of February. All right, but the rally stopped at the 20-day moving average, which is at 70.88, the minor swing high of 5th of March over here. So what we could see is that the hourly RSI is pretty bullish, continues to be holding above this ascending trend line support level over here, and hasn't hit the overbought level yet, and as well that it also in parallel stage that bullish breakout as well over here. Okay, so with this positive observation in the hourly RSI indicating some form of bullish momentum in the short term, coming back to the Aussie dollar, I will flip to a bullish buyer stance for today. So using 70.30 as my short-term pivotal support level, which was this congestion area here that has been formed during yesterday's 5 p.m. Singapore time all the way up until 9 p.m. Singapore time, where it did a bullish breakout at the 10 p.m. mark Singapore time yesterday. We tested it at 2 a.m. Singapore time today before staging that strong intraday rally at 3 a.m. hour mark due to Trump media interview signaling the end of the US-Iran war. So with that, I'll have a bullish bias, 70-30, short-term pivotal support level. Two resistance level to watch will be 70-88 today. Breaking above 70-88 will be that stubborn range resistance of 71-40 that has been in place since 12th of February this year. Only a bearish breakdown below 70-30 will negate this bullish bias view to see it floating downwards again to revisit 69.44, which is the minor swing low of last Tuesday, 3rd of March. Breaking below it will see a test on the medium-term pivotal support zone at 69.10, 68.90, which is confluence with the 50-day moving average as well. So that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen, let me share with you on the daily time frame chart. So the daily time frame chart is start to shape a shooting star right at this 158.80, 159.45, which is the swing high of 10th of January before the last, we call it a multi-week sell-off took shape over here. Right, and the RSI also being kept by this descending trend line resistance as well. So given the shape of that bearish reversal shooting star candlestick that has been formed right at the test of 158.80, 159.45 resistance level, I will flip to a mild bearish bias today on the dollar yen as well. So let us move to the hourly chart of the dollar yen. So using 158.90 as my short-term pivotal resistance level, two support level to watch on the intraday basis on the dollar yen will be at 157.40 over here, which was the congestion swing low area of 6th of March and 5th of March over here. All right, breaking below 157.40 exposes the next near-term support zone at 156.45 / 156.17, which confluence with the 50-day moving average. Only a squeeze up above 158.90 will invalidate this intraday bearish bias view on the dollar yen to see an extension of the rally towards 159.45 followed by 160.23. Over here, if you 160.23, if you go back in time on the daily time frame, all right, is this congestion area here of 29th of April 2024 and the low of 8th of July 2024. All right, over here. So that's about what 2 years back, close to 2 years back of resistance level. All right, so that's for the dollar yen, watching 158.90, flipping to a intraday bearish bias for today. All right, so that sum up the outlook on the FX market, the four major pair. So let us now focus on the global stock indices. All right, starting with the Hong Kong 33. So yesterday, one of the indices that we don't have a bearish bias view was the Hong Kong 33, representing the Hang Seng Index because it managed to survive at the long-term pivotal support yesterday on yesterday gap down, and yesterday gap down also managed to touch the medium-term descending channel lower limit that has been in place since 29th of January 2026 over here. So it broke above our pivotal, it broke above the upper limit of the neutrality zone yesterday and did a retest during 2 a.m. the Singapore mark, and it kept up today and hitting the next resistance level, which is the minor swing high of last Friday, and also this congestion area here. Previously, that is being formed on 2nd of March and 3rd of March, 25,780, 25,790. So with that, I will have a short-term pivotal support level for today for this rally to continue towards the upper limit of this descending channel. So 25,385 will be my short-term pivotal support level for today, breaking above 25,970. Potentially seek out the next intermediate resistance level at 26,350, which confluence very closely with the upper limit of this descending channel, and also the 50-day and the 20-day moving average coming very close to it. So a clearance above 26,350 will totally see a bullish exit from this medium-term descending channel improving the odds of the start of a new bullish impulsive up move sequence. So in first step, the next resistance level to watch will be at 26,690 in the short term, which is the minor swing high area of 27th of February. And if we start to see a bearish breakdown below 25,385, that would totally invalidate the recovery scenario for today on the Hong Kong 33 to see another choppy move to revisit the long-term pivotal support level at 24,765. All right, so that's for the Hong Kong 33. Next up will be the Japan 225 that's representing the Nikkei 225. So the Japan 225 also did a squeeze up over here, clearing above our short-term pivot, tighten short-term pivotal resistance zone as well. All right, after it fails to break below 51,055. So that was the low of being seen at the start of the Asia session yesterday. So right now, the RSI also did a bullish breakout over here. So if we connect this high here, all right, it did a bullish breakout and now seeking to retest this former descending trend line resistance, now turns into a pullback support level. So with that, I will be using 53,616, 53,066 as my short-term pivotal support zone to flip to a bullish bias scenario for today for a recovery above 54,606, potentially seek out 55,760, which is the minor swing high area of 6th of March last Friday, and also the descending trend line resistance from the high of 26th of February. So given that this descending trend line resistance is in parallel with the descending trend line resistance on the RSI, but the RSI has already give a bullish pre-signal of a bullish breakout, indicating that the 55,760 has a chance of breaking out above on the upside as well, given that the RSI is a rate of change, which tends to be a much more leading element indicator. So above 55,760, potentially seek out the next intermediate resistance in the near term, which is the minor swing high of 5th of March at 56,626. We also confluence very closely with the 20-day moving average. Only a bearish breakdown and the reintegration back below 53,066 over here, that would invalidate the recovery scenario to see another round of a slide to revisit 51,055 next. All right, so that's for the Japan 225. Next up will be the Germany 30 over here. So the Germany 30 also broke above our Titan short-term pivotal resistance yesterday. It only hit the low exactly at 22,686, which is my first support level at 11 a.m. Singapore time before staging that bullish reversal, right, that was seen yesterday. So given that it has already broken up the resistance level over here, so with that, I'll be using this resistance level. Okay, let me do a tidy up. This over here. So it will be a zone. Okay, 23,221, 23,068. Two two one 068 068. Okay, and if you were to do the Fibo retracement of this ongoing rebound, that's close to the golden ratio as well of 61.8%. Right? Oops, sorry. Let me do it up. Okay. First resistance level will be the 200-day moving average over here. At 24,162. 24,162. Okay, followed by this minor swing high that got rejected. Okay, by the former minor swing low area here, where it's broke down, the support broke down, got rejected on the 5th of March 2026 at the 4 p.m. mark Singapore time. So that will be at 24,350. All right, over here. Oops. Okay, so it's a zone as well over here. This is the zone, right? So with that, I'll flip to a bullish bias for a recoveries, further recovery potentially in any potential as long as this 23,221, 23,068 short-term pivotal support holds. Two resistance level to watch on the near term for today, 24,162, followed by 24,350 on the Germany 30. However, a bearish breakdown below 23,068 that would invalidate the recovery scenario to see a slide to revisit yesterday low at 22,687. Okay, next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 managed to bounce from the long-term pivotal support yesterday, which is the 200-day moving average, and cleared above our Titan short-term pivotal resistance level at 46,980. Now turns into a critical pullback support level at 46,980. So yesterday's US session rallied, stopped exactly at the former medium-term ascending channel support. Now turns into a pullback resistance zone at 47,736, 47,860 level. So I'll be using 46,980 as my short-term pivotal support level. A breakout above 47,860 will see a further extension of this recovery towards the next intermediate resistance level at 48,455, 48,864, which is the minor swing high area of so-called 5th of March, and so coming very close to the 20-day and the 50-day moving average. And if you do a descending trend line resistance from the current all-time high area on the 11th of February over here. So this is the all-time high area, 11th of February. So let me draw it for you guys to see. So there also confluence with this descending trend line resistance. That is pretty much key, where previous rally got kept by it and shaped that bearish reaction. So breaking above 48,864 with an hourly close above it, and more important, a daily close above this level. That could also indicate a bullish breakout above the 20-day and the 50-day moving average again, indicating the recovery of the US Wall Street 30, transverting into a bullish impulsive upmove sequence if we're able to surpass 48,864. So that's for the US Wall Street 30. Breaking below 46,980 will negate or invalidate this intraday recovery scenario to see a slide to revisit the long-term pivotal support again at 46,330. All right. Next will be the SPX 500. So the SPX 500 also managed to survive at the 200-day moving average over here. Okay. And staging a bounce back and cover the gap down resistance that is being seen during yesterday's Asia session. So using 6677 as my short-term pivotal support level, flip to a bullish bias for today, given yesterday's strong push-up to resist near-term support level to watch slightly above the short-term pivotal support level, which is the golden ratio of 61.8% as well, will be at the zone of 67.33, 67.20. All right, that former gap resistance that was being formed during Asia session yesterday. Next resistance level to watch 6848, followed by 69 figure level over here, and maximum 6958. So 6958 is very important because 6958 is this medium-term descending trend line resistance that has been in place since the current all-time high of 28th of January, close to the 7,220 mark level. So breaking above 6,958 will potentially transit the SPX 500 into another bullish impulsive upmove sequence over here. Only a bearish breakdown below 6,677 will invalidate today's bullish buyer's view to see a slide to retest yesterday's swing low area, which is the 200-day moving average as well, at 6,610, 6,585 next. Lastly will be the Nasdaq 100. So the Nasdaq 100 also did that recovery over here and is now coming very close to the upper limit of this medium-term descending trend line resistance from the high of 28th of January over here. Right. So the Nasdaq 100 yesterday, it kind of managed to bounce from this range support level of 6th of February that has been trading in this complex sideways range, forming a resistance at the top of the range at 25,420 level. Okay, so using 25,550 as my short-term pivotal support level, breaking above 25,107, potentially seek out the next intermediate resistance level, 25,263, which confluence with the 50-day moving average. Above it, potentially test 25,420, which is this complex range resistance that has been in place since 6th of February 2026 low. Only a bearish breakdown below 24,550 will invalidate this recovery scenario to see a slide back towards 24,350, which is the 200-day moving average, followed by 24,140 if 24,350 doesn't hold, and even potentially the swing low area of yesterday, 9th of March, at 23,995 over here. So that's for the Nasdaq 100. All right, so let us now take a look at the commodities market, which is the gold XAU/USD. So for gold XAU/USD, it continues to recover above our short-term pivotal support level at 5,046 due to that bearish reversal candlestick that's being seen on the 10-year US Treasury real yield below the 1.9% resistance level, and also below the 200-day moving average. So two key short-term resistance level to watch will be 5,192, 5,280. All right, so only breaking above 5,280 may expose the 30th of January 2026 minor swing high at 5,448 over here. All right, slightly below the current all-time high at 5,602, the intraday high. All right, over here. So only a bearish breakdown below 5,046 will totally invalidate this recovery scenario and see a choppy downward drift towards 4,960 and even 4,842, which is the minor swing low area of 17th of February, confluencing very closely with the rising 50-day moving average. So that's for gold XAU/USD. So lastly will be the West Texas crude oil over here. So let me take you through the hourly chart. So West Texas crude oil dramatic. Oops, sorry. Come on. What's going on? Oops. Okay, over here. Sorry about that. So West Texas crude oil broke down below our short-term pivotal support level, a very tight one, and drifted downwards. And what's interesting over here is that it managed to see a bounce of the ascending trend line support from the low of 26th of February, right? And also the RSI managed to shape a rebound after hitting closely the oversold area as well. So with that rather mixed element, so I will have a neutrality stance for today, neutral between 92.47 and 81.68, right? So this is the long bearish candlestick at the 3 a.m. mark yesterday after Trump made that remarks, signaling the end of the US-Iran war. So neutral between 92.47 and 81.68 over here. So only a breakout above 92.47 will eventually see a retest at yesterday's pivotal support, now turns into a key short-term resistance level at 102.25 level. So let me put it in writing. So above 102.25, that will pretty much be scary again. So if we see a breakout above 102.25, that means potentially we will see a continuation of this bullish, steep, impulsive up movement on West Texas oil to revisit yesterday's Asia session high at 116.56/119.54. So if this scenario happens, right, breaking above 102.25, that could also invalidate all the bullish biasness that's being seen on the global stock indices, where I shared with you guys earlier on, because the movement of West Texas crude oil has a direct correlation with the movement of the global stock indices. That means if oil prices go up, global stock indices sell off. If oil prices come down, global stock indices recover due to the conduit of that stagflation fear. All right, so something to take a note on the oil prices in terms of levels for today. All right, so key level 92.47, above it 102.25, breaking above 102.25 was the stagflation fears coming back again for a retest at 116.56, 119.54. All right, let me put this in writing. 116.56 slash 119.54. Right. Okay, so that sums up the intraday technical outlook on all the major we call it broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to take note of for today over here? So for key data to take note that has been released will be China balance of trade data. So what you could see over here is that exports continues to grow between these 2 months of January and February. During the Chinese New Year break as well. So export growth hit 21.8% year on year, above what market is expecting at 7.1%, and also above the December print last year of 6.6% year on year growth. But what's interesting over here is that import also continues to grow as well. So import also grew dramatically from what market is expecting at 6.3%, pardon me, year on year. So between the January to February period, it grew 19.8%. 19.8% year on year, also way above the December print of 5.7%. So these two-month print of January and February of 19.8%, pretty much encouraging, indicating that the domestic consumption side of the economy is spending as well in China, together with the external side of the economy, reducing the risk of a deflationary risk spiral, given that imports also grew more than expected. And thereafter, during the European session, pretty much quiet over here. Not much of a key data to take note of for the European session and even in the US session as well. So going forward in the Asia session tomorrow at 7:50 a.m. Singapore time, we'll have Japan Tier 2 inflation data, which is the PPI, the Producer Price Index year on year. So for year on year in February, market is expecting a slight dip to 2.1% year on year from 2.3% year on year. So that could potentially have some form of impact on the dollar yen and the yen crosses at 7 a.m. Singapore time tomorrow. So with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.